Today in this trade review, we are going to check this beautiful trade that we were following on the Elliott Wave Street membership. We have a trading room where we are looking every day for these setups. Let's do this exercise together. Please leave in the comments what you will do if you are in this setup right here. Look, you have a huge gap on the left. The price then moves up, and here you need to start making your decision. Will you buy it? Do you think that the price can go back to the high, and why? Or do you like to sell it? Please leave it in the comments what you will do in this type of trade. Let's develop this one together. So we have, traders, the huge momentum, the downside. As we can see, the volume during the leg down is quite significant as well. Then the price tries to recover, and at this stage, you could be wondering, okay, is the price going to fill this gap? Is the price going back into this area? When you check the volume and you see that the volume is reducing and the volume is drying up while the price is going up, and you can compare the volume with the impulse, the answer is that the probability that the price is going to continue higher here is almost zero, because the demand is not enough to overcome supply. The next step, when you are in this process, when you want to validate your trade, is to find the sell point. This could be the first one right here. So this could be our first entry at this area, and the protective stop loss should be no more than one tick above the high. The price sell-offs and starts having trouble at this area. Is near the 78, and we got another bounce back to the 78.50. So if we are short here, probably we already booked some partial profits. If you don't know how to do that, join us in the membership and I will teach you the step-by-step process to book your profits. The price then climbs, and the remaining part of the trade that we have the protective stop loss here. So let's have a look at the next candle here, and we have the next one. Okay, price tries to continue, it's the 50, and the next one validates again the short side. So if we got stopped out, let's suppose that we have the stop loss too tight to the high, or our broker's spread was able to reach the stop loss target, we can trigger again at the setup. Right here we can sell it again in case that we got stopped out, let's say. But look how interesting this volume, that is the strongest from the cycle, and the shape of that candle. Volume versus price provides a lot of information. First of all, it tells that demand is weak and supply is strong. That's the first thing that we are seeing there. And with the background or the context that we are seeing here, with this powerful gap, the strong volume on this side, the momentum using the MACD, and the shape of the candles that are small candles, losing momentum candles, as we can see, and we are at a liquidity area, 78.50. When we combine these elements, we know that this is a sell trade. The beauty of these type of trades is that the risk is minimum. If we trigger, let's say here, at the low of this candle, and we leave the protective stop loss here, this is the risk and this is it. So we can very easily and fast at least get to the one-to-one risk-reward ratio in order to have a safe trade. Then, after the price makes that a completion of the second wave, we got a second retrace. It's fine, and after that the price starts breaking down into the wave 3. At that stage, you are making good money because you are at the 1-to-1, probably almost a 1-to-2 risk-reward ratio, and at that time you can book some extra profits. And you can leave a small part of the trade because, as you can see in terms of the Elliott Wave count, we are looking for a big wave 3 down. So this trade is a real example of something that we were following in the membership, and we were selling here. I'm sharing all these setups in the Discord channel, and we were selling there. And let's stop this back test here to show you the result of that monster trade. Look, here was that little entry that we were looking for on the sell side, and this is the result that we got. From the 78.50s all the way down to the 68 area. So that's a huge move down on oil. Well, probably the trader is not going to grab all that leg down, but at least having a 1-to-10 or 1-to-20 risk reward trade. A key advantage of trading with this model is the fact that the stops are tiny. So we use tiny stops for our entries, and then we quickly start booking profits. We start managing the stop loss fast in order to optimize that trade, and of course that's going to reduce the risk a lot and is going to give you a great opportunity to grab the wave 3. So this is example traders. Now let me show you the membership. Right here we have on ElliottWaveStreet.com the membership, and on the membership we have a special of 50% of discount your first month, so you can try it out with a nice discount, and you will get access to the wave counts, to the trading room. We have a trading room every morning, the trading plans, the Discord access, the Trading Academy, and more. So these are all the list of instruments that we cover on a daily basis on the charts: the Forex and the crypto markets, the futures, and the stock markets. So there are many instruments inside the service, and there are many setups that we share during the week. Traders, please have a fantastic start of your trading session. I'll see you soon. Take care. Bye-bye.